Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's going on in Argentina. If you've been following the channel, you'll know that Argentina is in a complete state of disarray. The economy has been getting worse over the course of the last 12 months, and inflation has been going higher and higher. And the latest figures for August 2023 have now been released, and they show that inflation is now up to 124%. There has been an 11% increase month on month. Now, 11% is a high rate of interest in itself. If any countries in the West currently had inflation of 11%, it would be regarded as a crisis. But 11% is a monthly increase in Argentina at the moment, and this really highlights the severity of the situation. And the current rate of 124% inflation ranks Argentina as the fourth highest in the world. And if you've been following the channel, you should be able to name who the top three are. But just in case you're not entirely sure, I'll give you the answer to that question when we go through the details on Argentina's inflation. Now, you may be sitting there thinking, well, does Argentina really matter in a global context? Isn't it just another small country that's got itself into severe difficulty? Well, Argentina historically was a big player. 100 years ago, it was one of the biggest economies in the world. And even today, it's the 23rd largest economy by GDP. 46 million people live in Argentina. It's the second biggest economy in South America, and it's still an important part of the global economy. So what's going on in Argentina does have a knock-on impact to lots of other countries all around the world. Now, as the level of inflation has got higher in Argentina, more and more of the population are turning to the US dollar. They're losing confidence in the Argentine peso, and they would rather use the greenback. And there are now calls to scrap the currency entirely and go completely to using the US dollar. And this has actually been done successfully in 3 other countries in Central and South America. El Salvador, Ecuador, and Panama all use the US dollar. So in today's video, as well as having a look at what's going on with Argentina's inflation, interest rates, and currency, we're going to talk about whether or not Argentina should consider moving wholesale to the US dollar in the same way as these other countries have. We'll have a look at what happened in those countries and what's happened since they moved to the dollar, because there is an election coming up in Argentina on the 22nd of October. And the current leading opposition candidate, who's quite an outspoken and controversial character, is proposing that both the Central Bank of Argentina and the Argentine peso are scrapped, and that the country adopts the US dollar. So this is a very real possibility. If this guy's voted into power, there is a real chance that Argentina may move wholesale to the US dollar, which would be by far the biggest economy in the world to have done that. So before we get started on all of that, if you're interested in seeing more face-to-face videos like this, and maybe hearing a little about other topics that I'm not posting on YouTube about, then please check out my Patreon page, as I'm producing Patreon-only content over on that channel. But if you don't like Patreon and you'd like to support the channel, please check out the section below where you'll find links to buymeacoffee.com and YouTube's super thanks and membership. This chart shows the movement in the rate of inflation in Argentina over the course of the last 12 months. And what this chart shows is that over the last year, there has been a consistent increase in the rate of inflation. In September 2022, inflation was running at 83%, which was incredibly high. That was one of the highest rates of inflation in the world at that time. However, between September 22 and June 23, inflation increased in every single month. And by June, it was up to 115%. Now, in July, there was a glimmer of hope because inflation came down to 113%. Not exactly a level that you would start celebrating and getting the bunting out for, but there was a hope that it was showing signs of coming back down. However, in August, the increase in inflation has returned with a vengeance and is now up to 124%. And the increase of 11% in the month is the biggest single increase that Argentina has experienced at any point over the last 12 months. So the situation is currently critical and is getting worse rapidly. And you may be sitting there thinking, well, Argentina and inflation, it's like cookies and cream. They go together. It's always been the case. But if you look at this chart, which shows the rate of inflation over the last 10 years, you can see that what's happening currently is by far the worst situation that Argentina has been in for a very long time. back in 2014, inflation was actually running at around 10%, which admittedly is high in terms of what's going on in the West at the moment. But I'm absolutely sure that Argentina would love to have inflation of 10% currently. And you can see that between 2014 and 2019, there was an increase in inflation. And by 2019, it was up to around 60%. However, it did actually come back down through the COVID period, and it's only been over the course of the last 18 months that there has been a rapid and vicious increase in the rates of inflation. And in terms of where the current rate of 124% inflation ranks Argentina, not surprisingly, it is the worst performing of all of the economies in the G20. And the G20 are historically the 20 largest economies in the world. Argentina, as I mentioned at the start of the video, is actually the 23rd largest economy in the world, but they don't have promotion and relegation in terms of the G20. It's just a fixed group of countries. And you can see that the only other country anywhere near Argentina is Turkey, where the current rate of inflation is 59%. Every other one of the countries in the G20 has inflation of less than 7% currently. So Argentina is completely off the scale. And to answer the question that I set at the start of this video, the only 3 countries in the world that have higher rates of inflation than Argentina currently are Venezuela, who have 398% inflation. And if you're interested in finding out what's going on, check out the video that I posted recently. Lebanon, where inflation is now 252%. It's actually down from 254% last month, so things are moving in the right direction. Ho ho. And Syria, where inflation is 139%. So congratulations if you managed to get all 3 of those. It's A+ for you. But if we look at the countries ranked below Argentina, it really highlights how severe the problem is right now. Argentina's current rate of inflation is significantly higher than Zimbabwe, Sudan, Turkey, Suriname, Haiti, Sierra Leone, Cuba, Ghana, Iran, Egypt, Burundi, Malawi, Ethiopia, and Pakistan. And that really puts into perspective how bad this situation is, because every single one of those economies is in a state of crisis right now. And this chart shows the movement in food inflation in Argentina over the last 12 months. And this is a metric that I like to look at because it really shows us what the problems are on the ground. The poorest members of any society suffer the most when food prices are rising rapidly because they don't have any savings, they don't generally have any spare cash at the end of each month, and they're spending a very high percentage of their monthly income on food, up to 80 or 90% in some situations. So when the price of food is increasing rapidly, it causes major problems for this part of society because they simply can't afford to spend any more, and generally what happens is they just end up buying less food, and so people start starving. Now 12 months ago, the rate of food inflation was at 86%, which is again a critical level. That is a serious problem. And between September 22 and May 23, prices continue to increase in every single month. Now in June and July there was a minor reduction, however it was still running at more than 100%, so still off the scale. But in August 2023, the rate of price increases for food was above 133%. So that means that compared to this time last year, food is costing significantly more than double. And wages in Argentina have not been increasing at anything like that rate. In fact, the last set of data that was released by the Argentinian authorities shows that the year-on-year increase in wages in June was 5.7%. So if food prices are going up by 130%, but your wages are only going up by 6%, that really highlights the problem and means that actually a bigger percentage of your monthly income will have to go onto food because you've got less money to go around, and food is an absolute necessity. You have to buy it to survive. This chart shows the official interest rate in Argentina over the course of the last 12 months. And the reason I wanted to show you this is that we've talked a lot about the relationship between interest rates and inflation. If inflation is high, then generally speaking, central banks look to increase interest rates to discourage people spending. And what this chart shows is that 12 months ago, the official interest rate in Argentina was 75%, which is off the scale. When you've got interest rates at 75%, nobody is borrowing any money. Nobody wants to pay that sort of interest. That is higher than loan sharks, than gangsters, people who will extort money from you, wouldn't be prepared to charge you 75% because it's ridiculously high. But that was the official rate of inflation in Argentina last year. And over the course of the last 12 months, we have seen a number of interest rate increases, and the official rate is now 118%. So basically what that's telling us is that the Central Bank of Argentina doesn't want anybody to borrow any money. But as we've just seen from the inflation data, despite the fact that interest rates were firstly very high and secondly have been increased over the course of the last 6 months on numerous occasions, it hasn't had the desired effect. We haven't seen a reduction in inflation in Argentina. In fact, we've seen inflation going up. And the reason for that is that there is now a complete disconnect in Argentina. What's happening with interest rates and what's happening with inflation are not linked, because the majority of people in Argentina are not using the Argentine peso. The only way that you can control your economy and take inflation down by increasing interest rates is if everybody is using your currency, because that's the official rate of interest that applies to loans and everything else that are coming from the banks controlled by the central bank. If everybody's using cash, if everybody's using the greenback, if everybody's being paid in US dollars, then nobody really cares what's happening with interest rates because it has no impact on what they're doing on a daily basis. And unfortunately, from Argentina's point of view, that's the situation that they find themselves in now. And that means that it's very difficult to be able to control your inflation because you've lost your main control mechanism. This chart shows the movement in the exchange rate between the US dollar and the Argentine peso over the course of the last 5 years. And the reason I wanted to go back over 5 years is it shows that the problems for the peso have been accelerating over the course of the last 18 months, in line with what we've just looked at for inflation. Now, 5 years ago, $1 US was trading on the official markets for around 40 Argentine pesos. And between September 2018 and December 2021, there was a gradual reduction in the value of the peso. And by the end of 2021, $1 US was trading for around 100 pesos. However, as you can see, over the course of the last 18 months, there has been a rapid decline in the value of the peso. And today, the official exchange rate is $1 US for 350 Argentine pesos. And obviously for a country that is a net importer, that's having to import large quantities of fuel, that represents a major problem, because if the value of your currency is diminishing, it makes everything more expensive in your home economy. If you're having to buy in barrels of oil which are priced at $90 US currently, a reduction in the exchange rate between the dollar and the peso from 100 to 350 means that in relative terms, that oil becomes 3.5 times more expensive for the people of Argentina. However, on top of that, obviously you have situations such as the period following Russia's invasion of Ukraine, where oil prices actually increase anyway. We saw oil prices getting up to around $120, $130 per barrel. So this means it's a double whammy from Argentina's point of view. Prices are going up because market prices are rising, but if the value of your currency is falling at the same time, it makes it even more expensive in relative terms. And if we reduce the scale of this chart to show what's been happening over the course of the last 12 months, you can see that in the period between September 22 and August the 11th, there was a gradual and continued decline in the value of the peso. However, on August the 14th, the Argentine central bank took the decision to devalue the peso. They actually reduced its value by 18%. So you can see that the chart becomes vertical at that point. And if you take a step back and look at the shape of this chart, it does look very unusual. It looks very artificial. Normally, when you see an exchange rate chart, you have highs and lows and peaks and troughs and lots of different movement on a daily basis. But here we have virtually a straight line. And the reason for that is that the Argentine central bank is controlling the exchange rate. The rate of $1 US to 350 pesos isn't a free market rate. This is being set by the Argentine central bank. And this chart shows the same exchange rate data for the US dollar and the Argentine peso. It's shown in the light blue line at the bottom. However, what it also shows is the blue dollar exchange rate, or the black market exchange rate. So this is the actual rate that dollars and pesos are trading hands for on the streets of Argentina. And as you can see, since 2020, there has been a clear divergence between the official rate, which is being managed by the Argentine central bank, and the black market rate. And the current exchange rate on the streets of Argentina is that $1 is trading for around 725 Argentine pesos compared to the official rate of 350, which means that the actual purchasing power of the peso is less than half of what the official rate says that it is. And when you combine a rapid reduction in the exchange rate of your currency with high levels of inflation, it means that the purchasing power of the Argentine peso is falling on a daily basis. And that's driving high levels of dollarization in the Argentine economy right now. People would rather be paid in US dollars, they would rather hold their savings and their cash in US dollars, and they would rather buy things in US dollars because the value of the dollar isn't moving on a daily basis. But if you're being paid in pesos, you can see how the value is falling. And worse than that, if you're holding your life savings in pesos, you potentially could see your life savings go up in smoke just because the value of the peso has fallen so dramatically. So this is really driving everybody to want to use the US dollar. And that represents a major problem for Argentina because they can't control the economy if everybody has abandoned the peso and moved to the dollar. Now, as I mentioned at the start of the video, 3 economies in Central and South America have actually moved wholesale to using the US dollar. Panama gained its independence from Colombia at the start of the 20th century, and although it has an official currency of the Balboa, it doesn't actually print any paper notes, but rather uses the US dollar. Panama does produce coins, but the vast majority of the cash that's used in the country is the greenback. After a long period of high inflation, bank bailouts, devaluations of the currency, and debt defaults, Ecuador announced in January 2000 that it was moving to using the US dollar as its official currency. And one of our favourite countries on this channel, El Salvador, which is led by the highly charismatic president Nayib Bukele, announced in 2001 that the official currency of El Salvador was now the US dollar. And interestingly, in September 2021, Nayib Bukele announced that El Salvador now has a second official currency, Bitcoin. Now, in terms of what's been going on in those economies, this chart compares the level of inflation for 6 Central and South American economies over the course of the last 6 years. The green line plots inflation for Ecuador, the purple line Panama, the yellow line El Salvador, and the 3 thinner lines are the inflation rates for Brazil, Chile, and Colombia. And as you can see from the right-hand side of this chart, between 2021 and 2023, inflation in Ecuador, Panama, and El Salvador was significantly less than it was in Brazil, Chile, and Colombia. Now, obviously, there are a lot of different factors that feed into the rate of inflation. So I'm not suggesting that the moving to the US dollar is a silver bullet to solve the inflation problem. But what this chart does show is that over the course of the last 6 years, inflation in Ecuador and Panama has been less than 5%. And in El Salvador, it's been less than 8% at all periods. And when you compare that to what's going on in Argentina, where inflation is now 124%, these statistics do look attractive. And these 3 countries are also doing better than Brazil, Chile, and Colombia. So I think the overall takeaway from this chart is that the move to using the US dollar as their main currency hasn't had a negative impact on any of these economies. And in fact, over the course of the last 6 years, they've had very attractive rates of inflation. Argentina's economy minister has announced that domestic crude oil prices will be frozen at $56 per barrel until the end of October after an agreement with the industry to try to reduce the high levels of inflation that are currently being experienced in the economy. Argentina's Vaca Muerta shale formation holds the world's 2nd largest shale gas reserves and the 4th largest shale oil reserves in the world. And this formation is key to Argentina's ambitions to become an energy exporter and also its objective of exporting liquefied natural gas. Argentina's largest oil producer is the state-run company YPF. However, the 2nd largest company is Shell. And the company's chief executive in the country, Ricardo Rodriguez, recently stated that the oil price caps that are being imposed by the Argentinian authorities are discouraging future investments. Rodriguez highlighted Vaca Muerta's phenomenal quality and said that Shell would like to invest more than the current $500 million per year. However, restrictions on accessing foreign currency and the Argentine price regulations on oil have made Shell think twice before deciding where to invest. We do not have a free market price for Argentina, but my colleagues in Brazil or Mexico do. This generates a big difference in competitiveness, Rodriguez said about Shell's South American operations. So clearly the problems that are being experienced in Argentina with regards to inflation are now impacting on the oil industry and discouraging companies such as Shell from investing further into Argentina to help develop their facilities, to increase their oil and gas production, to earn more GDP and help the country get out of the situation it's in. So this is really a vicious circle that Argentina has found itself in. So what's the summary and conclusion today? Well, I wanted to post this video really to give you a latest update as to what's going on in Argentina. And as we've seen from today's data, things are getting materially worse. Inflation is now above 124%. There was an 11% increase in the month of August. And that is just completely unsustainable for any economy. Argentina is now a runaway train without a driver. The current president has announced that he's not interested in running for re-election. So he's basically saying, nothing to do with me, guys. Somebody else can take over. And we've now got a complete bun fight in terms of who is going to become the new president. And it looks likely that one of the most controversial characters could potentially win that election, and as part of his manifesto, he has stated that he is intending to scrap the Argentine central bank and to replace the Argentine peso with the US dollar. Now, as we've seen in today's video, that's actually been done by a number of other countries in Central and South America. Panama has actually been using the US dollar successfully for more than 100 years. Ecuador moved to using the dollar in 2000, following a series of debt defaults, high inflation, and bank bailouts. And El Salvador followed suit in 2001. And what we've seen from the data out of those three countries is that that situation appears to be working quite well for all of those economies. When you compare the levels of inflation in those three countries to what's going on in Argentina, it looks like a very attractive move. But all three of those economies are significantly smaller than Argentina. And the problem that you have when you do decide to abandon your home currency and use the greenback is that you lose control of all of your fiscal policies. Because as we've talked about many times before on the channel, if you're a central bank and you're trying to control inflation, the usual way that you would do that would be by moving interest rates. So if you've got a period of high inflation, generally speaking, you would increase interest rates because it makes borrowing more expensive and less attractive, therefore reduces the supply of money in your economy and therefore reduces demand, and that reduction in demand should lead to a reduction in prices. That's what simple economics tells us. However, that isn't the situation in Argentina. As we've seen from today's video, interest rates are sky high. They are over 100% now in Argentina. But despite that fact, inflation is 124% and is increasing rapidly. In fact, the rate of acceleration is growing in Argentina. So despite the central bank increasing interest rates to try to stop people from spending, it's actually having the opposite effect. It's increasing inflation. And the big question is, why is that? And the answer to that question is because the central bank has already lost control of the economy. A lot of people in Argentina prefer to use the greenback now anyway. Whether it's an official currency or not, they have more confidence in the long-term value of the US dollar than they do in the Argentine peso. If you were to put your Argentine pesos in the bank, you'd be getting paid a high rate of interest, over 100%. So that sounds fantastic. But because inflation is running at a much higher rate than the interest rate, the real value of your money is falling. The purchasing power, the things that you can buy with your Argentine pesos, is reducing on a daily basis. And when you get that situation, people decide that they need to go for self-protection, look after their own net worth and their own capital. And therefore, by holding US dollars, being paid in US dollars, and buying things in US dollars, it gives you much more certainty as to what the value of that currency is. So we've got a situation in Argentina today where basically the population has already abandoned the Argentine peso. So making an official decision that you're going to scrap the currency and use the dollar actually is just a reflection of reality, what's happening on the streets. It's a little bit embarrassing for Argentina because every country in the world wants to have their own currency. They want to have their own identity and show the world that they're doing well. But unfortunately, Argentina is on its knees. It isn't doing well, and it's not going to prove anything to anybody anybody by pretending that the Argentine peso can come back. And if we look at what happened in Zimbabwe, Zimbabwe actually decided to scrap its currency after it had incredibly high rates of inflation, over 1,000% inflation at one point. And then the Zimbabwe authorities decided to try to reverse that decision. So they moved away from using the US dollar back to their own currency. But what's happened in reality in Zimbabwe is that the people of the country have completely ignored that. So more than 80% of all transactions are still going through in US dollars. So the country is trying to rebuild its currency, trying to get some credibility back. But the reality is it's very difficult to do that. So if Argentina does decide to go wholesale into the US dollar, this is going to be a long-term commitment. It will be very difficult to reverse that decision at some point down the road because people would just not have the confidence to be able to start being paid and hold all of their earnings and life savings in pesos if they think that there's a chance that the value of that could diminish rapidly, as it is right now. And one of the other problems that moving to the US dollar actually could solve is bringing in more investment into the country. As we saw earlier in the video, Argentina has now brought in price controls, limiting the price of a barrel of oil to $56 when the market value is more than $90. Now that is absolutely crazy. And what that's doing is limiting any profitability that outside investors could make from developing oil and gas facilities in Argentina. And this represents a big opportunity for the country over the course of the next 20 to 30 years. If they could get oil majors to come in and help them to develop their shale oil and gas facilities, then they could become a big player globally. But if you're limiting the price and therefore limiting the returns that any of those external investors can make, then nobody is going to want to do that. That's one step away from what happened in Venezuela when the government decided to nationalize all of the oil majors' infrastructure because they thought it looked like an attractive industry to take control of. And that is the sort of situation that big companies want to avoid at all costs. So Argentina needs to be really careful. It wants those oil majors to come and help it to grow its income, but it can't restrict the profitability and the price in the market of the assets that those companies are developing. And the reason that the Argentine government have done this is because of what's happening with inflation. They're trying to limit price increases for fuel for the people of Argentina to try to make the cost of living more manageable. So if they could remove the inflation problem, it would remove the need for having fixed prices and therefore potentially open up Argentina to more external investment. So moving to the US dollar potentially could help to achieve that, because we've seen from the other three countries that have moved wholesale to the US dollar that their levels of inflation are actually quite manageable now because they're not having to benchmark prices against what's happening in the international market. Everything is being priced in dollars. Purchases, salaries, savings, everything. So it simplifies the economy. Everybody can become more relaxed and therefore hopefully prices start coming back down. So the overall summary of today's video is that the crisis in Argentina is getting worse. It's now getting to breaking point. Now we're going to have a change of government at some point over the next month or so. And that new government may well bring in radical policies. That's what it looks like at the moment. But those radical policies, including scrapping the Argentine peso, could actually be the solution that Argentina needs to get itself out of this current fix, because all the things that the existing government have been doing over the course of the last 12 to 18 months have not been working. Things are getting worse. It's getting to breaking point, and something has to be done to try to turn things around. And I think it'll be really fascinating to see what does happen over the course of the next 6 weeks, because we've got that election, we've then got the new government, and then we'll have the new policies. And then it will be a really fascinating case study to follow to see exactly what happens and if the new government can turn things around and put Argentina back on the map, get its inflation down, and get the economy moving forward again. So hopefully you found today's episode useful, informative, and thought-provoking. If you liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.